Hi there, welcome to Grain TV. It's Tuesday, August 9th, a mixed day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn gave up 2.5 cents a bushel. Beans closing 3.25 higher, although had been trading much higher than this throughout most of the day until the last 10 minutes when we sold off. We had been up as much as $9.95 on November futures before settling around $9.88. And in Chicago, wheat, a flat day, closing down 0.5 cent. News today, there were some interesting things to talk about. First, let's talk about South America. AgriConsult came out with a new round of forecasts for South America down there, and they look to see a smaller corn crop than originally projected in July. In July, they projected 69.1 million metric tons, and now they're calling for a 68.5 million metric tons. That is off sharply from last year's crop size of 84.7. And of course, what that means, and we're seeing the ramifications of that, is that Brazil is going to be a net importer of corn. They are expected to be buying corn in particular from Argentina. While U.S. won't be necessarily selling them corn, that leaves us more competition or more business potential going into the first half of the marketing year. And soybeans, they look for a soybean crop that's 95.4 million metric tons versus 95.6 that they projected in July. That too is off slightly from last year's 96.2. So overall, continued theme that Brazil's crop continues to shrink as we get further and further along. Other news, we had yet again another day, 10 days in a row now, of export sales announcements this morning by USDA. This time a smaller number, 120,000 metric tons of soybeans for the new crop delivery year. But overall, when we look at the last 10 days, it has just been consistent or a steady stream of export business, of course, most of that going to China. Other news in France, they continue to monitor the crop situation there. In wheat, where we're seeing lower and lower production figures. Last production figures that we were seeing were around 30 million metric tons. The latest figures coming out of France are 28.7 million metric tons. That's a 33-year low on a only 5.5 ton per hectare yield. Also, not only in terms of yields being lower, but also in terms of the quality of the crop. The heavy rains really deteriorated some of the crops at the late part of the season. Less than 40% of their wheat is expected to be milling quality. So that sets the stage for more export business for the rest of the players in the wheat market. And of course, U.S. is struggling a little bit with quality as our protein premiums have been fairly limited or fairly bad, especially in the hard red winter wheat country. Let's change gears and talk about the upcoming Friday report. That's going to be a big report because USDA is going to give us their first survey-based estimates of U.S. corn and soybean production. Right now, we have some early projections by analysts, and we're going to summarize those and look to see what analysts are expecting. Not surprising, everyone is veering on the high side from the July numbers. Everyone's expecting a bigger yield, a better production number than what USDA had in July. So let's take a look first at corn. On average, we see yields expected to be 170.6 bushels to the acre. That is up from 168.0, but there is a fair amount of variability in that 168.6 to 175. Likewise, on production, we're expecting a 14.7 billion bushel crop versus last July's number of 14.5. Again, significant variability all the way from 14.58 up to 15.15 billion bushels. So everyone is leaning heavily to one side, and that is a much bigger crop than what we saw in July. Same news in soybeans. Everyone's expecting a bigger turnout or bigger numbers for soybeans. Yield expected to be 47.5 versus 46.7 in July's USDA report, and likewise a nearly 4 billion bushel crop versus 3.88 in July. So overall, that's what the traders are looking for. Obviously, there are some things that are sort of potentially going to cause some leaks in in corn production in particular. We talked about this yesterday with the hot temperatures that have been plaguing much of the Midwest. We have seen some of that take shape in terms of lower ear counts and kernel counts on the ears and such. So there is the potential that we could see maybe not as robust a figure in USDA's report on Friday. Let's take a look technically at this corn market, because I think the corn market in particular has been beaten down, and while soybeans have been able to recover some of the losses here in the last week of trading on positive export news, corn continues to sort of languish at these lows on December corn around that 335 mark. If we take a look at the daily chart, I want to focus in on the RSI in blue in comparison to the price action up above. This is a chart you can get in the Grain Hedge trading platform. First of all, let's go back to the highs that we established back in June, and you can see the highs that were being printed around that 447 mark were a continuation of the highs previously. But if we look at the RSI chart down below, you can see that they are diverging. That is, the chart or the price chart is making new highs on successive runs, while the RSI is not keeping pace. It's actually diverging from the price activity. That is a bearish sign when that happens, when the prices are making new highs but the indicator is moving lower. That is signs of maybe the market's exhausted and ready to turn lower, and you can see it did in this case. On the flip side, we've now come to a point where we're starting to see what may be termed bullish divergence, where the RSI is actually making new highs in relation to the price chart making new lows. So we go back to the the first low back in July 8th, and then we've set new lows since then, but you can see that the RSI has been building up. So this may be a chance for the market to get some recovery here, to get at least a pullback. And if we're looking for a pullback, I think the first thing we got to be looking for is probably the 346 mark. That seems a long way away given how choppy and sluggish the trade has been. But we have a crop report on Friday, and that crop report could send some people to the sidelines if it becomes even neutral to slightly bullish. So 346 would be my first objective to look for. We need to sort of clear that to get some shorts moving to the market. Above that, then the next sort of immediate objective would be 379. I think that's less likely to get tested here on Friday, but I think, with Friday's report coming out, there can be a lot of volatility, and I wouldn't be surprised that any sort of number that spooks some people may get us a short covering rally. So if you are looking for trading opportunities going into this report, whether you're a speculator or whether you're a hedger, I think short dated options can be a valuable tool right now. In particular, I've been looking at the August 21st expiration on new crop corn and beans. So these are tied to the December futures in corn and the November futures in soybeans. If we look at December corn, excuse me, in the middle of the day when I quoted these, it was 333. You could get a 340 call for 5 cents. So that's basically only 7 cents away from the market in terms of the intrinsic value here, and it's only costing you a nickel. That's a pretty small move in comparison to some of the moves we've seen this summer. So, if you think that the market has the potential to see any sort of price reaction after this report, then these options, these short-dated options, not only get you past the report, but get you a week past that they're actually good until August 21st. They may be a good play. On the downside, there could be some risk to the downside for sure. If USDA really comes in on the high side of expectations here, then I wouldn't be surprised to see us take out the 318 low that we established back in 2014, and then the low $3 mark may just be around the corner. So a 4-cent protection on a 325 put may not be a bad move. Likewise, in soybeans, you can get these. These are, of course, a little more pricey, penny per penny, because you're paying for soybean volatility. But even so, in light of the volatility we've had, a 1020 call, only 13 cents, and a 970 put, 10 cents. As always, if you have questions or want to learn more about how to place these types of trades or use these in your own risk management situation, give us a call at 877-472-4607 or visit us online at grainhedge.com and take a free demo of our trading platform. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.